Hello, good morning everybody. You're with Martin Panev, Chief Account Executive Trading Analyst, GDMFX Europe. Welcome to today's European market session outlook. As usual, starting with the US markets, basically the Nasdaq has added another session of negative trading with another 30 pips down, and the Dow follows by erasing another 15 pips. The situation with the commodity trading S&P 500 is absolutely the same, with 20 pips decline already. The technical analysis, though, shows probable continuation of the fall with all three US indexes. The Dixie index has declined a bit, and the USD has lost some ground. The wholesale inventories and the Red Book data is coming out today. European markets, the DAX wiped out another 150 pips since yesterday. The French CAC 40 another 70, and the British FTSE erased about 60 pips. A slump in the construction and chemical companies sent the European stocks down after a 4-week rally. The trade balances of Germany and France came out already this morning, and we saw a steady surplus in Germany and a slight contraction in the French. The pound rose with 0.4% against the dollar, and after the Bank of England announced in its quarterly report that households can withstand a gradual increase in the interest rates. However, nobody is expecting the interest rates to come any sooner than the third quarter of next year. Borrowers will be spending less if the benchmark rate increases, but this would be countered by more spending by the savers, which is what the Bank of England said. The pound versus the Aussie, 128 pips up yesterday. The pound versus Canadian dollar, 160 pips up yesterday, going up today. We have industrial and manufacturing data scheduled in the agenda for the pound in the calendar today. Moving along to Asian markets, the Nikkei, 120 pips down, Hang Seng 550 pips down, S&P 200 90 pips down. The Japanese yen was the biggest winner yesterday with large gains against all major rivals. Against the dollar, 160 pips range, 94 pips down, versus the euro 80 pips, 85 pips down, versus the pound 57 pips down, versus the moving along to Aussie dollar, 65 pips range, 8 pips down, versus the Kiwi, 67 pips range, 23 pips down. We are waiting for a lot of Tier 1 events in the calendar for the Asian Pacific markets tomorrow with regards to the JPY, the New Zealand dollar, and the Australian dollar. Also, the Chinese are to print out the CPI and PPI reports tomorrow and on Thursday. Commodities, steady declines in the energy sector with 15 cents depreciation in the natural gas prices and another $2 drop per barrel with regards to WTI crude oil. The metals, though, has made some gains with $15 on gold and about 20 cents on the silver charts. West Texas Intermediate fell to a 5-year low as Iraq followed Saudi Arabia in cutting prices for crude sales to Asia, adding to signs that the OPEC's biggest members are defending market share. The head of Kuwait Petroleum Corporation said that oil will remain around $65 per barrel for the next 6 months until OPEC changes its collective production or the world economic growth revives. Today's a huge meeting for the energy sector. Russia will not participate in the EU meeting. About the South Stream, the energy minister, Mr. Novak, told journalists that Russia is not a member in the European area, in the European Union, and therefore they will not attend the meeting. Tomorrow, crude oil stocks change. On Thursday, natural gas storage change. That's all for me from today. Thank you very much for your attention. Cheers and have a successful trading day. Cheers. Bye-bye.